It wasn't all sunshine and rainbows for the UK stock market in September. One company saw their share price fall 13.3% in the month. Stick around if you want to find out who that was, as well as the other bottom five, as we play the FTSE game.
Playing the FTSE game. Playing the FTSE game.
Welcome back to the channel, everyone. If you are new here, I'll explain quickly what we're doing. We are simulating investing 3 different amounts each month into every company within the FTSE 100, as well as a few popular ETFs, or leaving funds as cash earning interest. If that's something you would be interested in, then please do subscribe. It will help the channel grow. Our 3 different amounts are to show various levels of disposable income people may have to invest each month. Those are Seed, £100 a month, Tree at £800 a month, or Forest, £1,666 a month, which would max out the current 20k ISA allowance in the UK over a course of a year. Now, the first company in our bottom 5 for September is actually a bit controversial, and that is because technically they weren't even in the FTSE 100 at the start of the month. How does that happen? Now, I won't go into too much detail, but every 3 months there's a company called FTSE Russell who review which companies should be in the FTSE 100 index. And this is done by measuring every company's market capitalization. That is the company's public value, which is measured by the number of outstanding shares a company has multiplied by their current share price. Once all the companies have had their market capitalizations ranked, there's a football-esque promotion and relegation system where FTSE Russell will determine whether a company should be put into the FTSE 100 or removed from the FTSE 100 index. In order to be promoted into it, a company has to be in the top 90 of market capitalization ranking, and to drop out of it, they need to be 111th or below. That's to stop the index constantly changing every 3 months, where companies might be on the cusp of 101st or 99th, for example. And it's a bit like a popular nightclub with a 1 in, 1 out system. So in 101st in our September rankings is Burberry. They re-entered the FTSE 100 on September the 22nd, so I have worked out what their share price was back at the start of the month and what our investments would have done. Any companies that fall into a similar position in the future, I'll do the same and back calculate what would have happened in prior months as we move forward with this journey of investing. What do Burberry do? They predominantly manufacture clothing. Reading from their website, their founding principle is inspired by the weather. Burberry was founded on the principle that clothing should protect people from the weather. The original performance material, gabardine, was invented by Thomas Burberry in 1879. The breathable, weatherproof fabric revolutionized outerwear and opened spaces for wearers to explore the outdoors by providing warmth and protection from the elements. For 169 years, Burberry has championed British craft and production. They proudly uphold that legacy today by preserving traditional craftsmanship while driving innovation in all areas of their business. So Burberry had a particularly tough start to the month in terms of its share price. The 9th of September there, a particularly sharp decline. I've searched for news articles and there's no real indication as to why this happened or a particular event that triggered that. But then they did rejoin the index on the 22nd, as I said earlier, and they've grown a bit since then to the end of the month. And it also happened to coincide with the end of London Fashion Week, where Burberry launched their 2026 spring and summer collection. If we look at how our investment has performed, down 9% in terms of share price, which at the seed level would be an £8.96 loss, at the tree level £71.71, and at the forest level £149.33. Now I'm just going to jump in here quickly to say that this is not financial advice. I'm not a financial advisor. If you are going to invest, please do your own research, get some professional advice. Stock values can go down, as we're seeing here, as well as up, and past performance does not guarantee future success. We are merely here simulating what would happen if you invested different amounts into every company each month. 102nd in the rankings is Ashtead Group. Ashtead is an international equipment rental company with national networks in North America and the UK, trading under the name Sunbelt Rentals. They rent a full range of construction and industrial equipment across a wide variety of applications to a diverse customer base. After a bit of initial growth of their share price, there has just been a gradual decline for the rest of the month. Same as Burberry, a 9% decline at the seed level. That is an £8.97 loss, the tree level £71.73, and at forest £149.37. 103rd in the rankings is Haleon. What do they do? Reading from their website, they are the world's first truly global consumer health company. They employ over 24,000 people and operate in over 170 countries. They are listed on the London and New York stock exchanges. Their purpose to deliver better everyday health with humanity guides them in everything they do. It's the impact they want to create for consumers all around the world. They have some very recognisable brands such as Sensodyne, Aquafresh, Panadol and Savirax. Like the first two companies in our bottom five, Haleon also saw their share price fall 9% in September. Most of that happening on the 16th of the month, when Barclays noted that their US accounts were seeing slower category growth and destocking. So similar to the first two companies we looked at the seed level, our investment would be £8.98 down, at the tree level £71.85 down, and at the forest level £149.63 down. 104th and the penultimate in the rankings for September is BT Group. They are a telecommunications company. The biggest part of their business is with consumers. Reading from the website, they are the largest provider of consumer mobile and fixed broadband communication services in the United Kingdom. With over 25 million subscribers, they're constantly improving and innovating their infrastructure to provide the best networks and entertainment services, including gaming and TV, to seamlessly connect their customers wherever they are to the things that matter most to them. Again, there is nothing in the news really that indicates why their share price has gone backwards 11.4% in the month. But what that does mean is that for our seed investment, that is a loss of £11.42, for tree £91.38, and for forest £190.30. So not a particularly good month for the BT share price. So, bottom of the September rankings, in 105th place is Diageo. Now, you might not have heard of Diageo, but you'll definitely have heard of some of their brands. Reading from the company website, with over 200 brands and sales in nearly 180 countries, they are driven to be the world's best brand builder, leading the way in premium drinks, and specifically alcoholic drinks is what they specialize in. So to go through some of their brands, they include Guinness, Johnnie Walker, Baileys, Smirnoff, Captain Morgan's, Gordon's, Pim's, Hop House Lager, and there's many others, but those are the ones that I would say are the most famous. Diageo's share price fell 13.3% in September. It has been struggling for a longer period than that. There is an article on Yahoo Finance that puts this down to three factors. Firstly, the introduction or potential future introduction of tariffs, which would make importing alcoholic drinks more expensive for American drinkers, which would reduce the demand for Diageo's products. Secondly, the industry facing more calls for greater restrictions on alcohol sales and putting health warnings on the products, similar to what you see on tobacco products. And then finally, with those increased prices and duties, it's making the product more expensive, which is turning off the younger generation, as young adults tend to drink less than previous generations and look to spend their money elsewhere. So that reduces the long-term outlook for sales for Diageo as well. What that means for our simulation is that at the seed level we would be £13.35 down for September, at the tree level £106.78, and finally at the forest level £222.38. So that brings to an end our September update for the bottom 5 performing companies in the FTSE 100 in terms of their share price. Obviously, 1 month of data is not a lot to go on, so if you are enjoying these videos and want to see how these companies perform over the longer term, then please do subscribe to the channel to get the latest updates and videos when they are released. If you want to see how the top 5 companies performed, then click on the link that will be on the screen now, and I'll see you on the next one, guys.